Is this the lull before the storm? In 2024, we saw a flurry of Web3 startups, and many of them set up custom chains and roll-ups. The scenario changed substantially in 2025 as many of these Web3 startups did not have a clear value proposition and therefore were not able to generate revenues. However, there was another significant development that happened in 2025, and that's thanks to a lot of regulatory changes in the financial services space. You had the Genius Act in the US, MiCA in EU, and various regulations around tokenization in UAE and elsewhere. And that in turn has given fillip to the entire financial institutional space. And we believe that 2026 is going to be the year where a lot of blockchain activity is going to ramp up as far as the financial institution space is concerned. And therefore, privacy is going to play a very critical component there because you're going to have banks setting up chains on public rails, and therefore privacy becomes really important. So today we're going to have a discussion around how blockchain privacy can really be demystified for financial institutions and fintechs. And as part of that conversation, I'd like to invite Dr. Ravi Chamria, who is the co-founder and CEO at Zeeve, as well as Sankalp Sharma, who is the VP of Engineering and co-founder at Zeeve. And my name is Thomas Abraham. I'm the Chief Revenue Officer at Zeeve. So Ravi, just to kickstart the conversation, before we dive deep into privacy, perhaps our users might be really interested to understand what are some concrete and relevant blockchain use cases that are of relevance for financial institutions and fintechs.
So, financial institutions have been the early adopters in blockchain way back in 2016-17. And we in fact were involved in quite a few POCs and pilots while working with banks. Now, over the period of last 7-8 years, a lot of use cases have been very well established. Some of the major use cases which have now we are seeing most traction in the banks. First is the real world asset tokenization. And real world asset tokenization covers quite a few use cases like tokenized deposits, tokenized funds, where we are already seeing quite a few deployments that have happened in production. Then we have tokenized digital securities that includes equities and bonds.
Yeah.
And then the second bigger use case is payments and settlements, and that is maybe cross-border settlements or within the specific geographies. So a lot of payments and settlement use cases are being done. And then stablecoin is forming the backbone in terms of, again, not just touching upon the payments and settlements, but also the tokenization use cases. And then we have some other use cases which are gaining traction like trade finance, where there were some earlier consortiums, but now we are seeing a resurgence of trade finance activities. Right. So these are some of the larger use cases which we are seeing, whether it be institutions, banks, or fintechs.
Yeah, no, absolutely. So Sankalp, there are some fantastic use cases now coming out for financial institutions. But are these use cases going to be driving adoption of custom chains or roll-ups for banks? Because today we see a lot of banks, in any case, making their assets available across various chains. So what do you see that trend, and what use cases are specifically driving the need for a custom chain?
Yeah, so I think I'll start with what 2025 has been for all of us in Web3, right? There has been quite a bit of a withdrawal that has taken place in industry in terms of the number of chains, number of solutions that were looking to have their own custom chains. And when something like that occurs in an industry, there's usually some good use cases that show their strength of what they hold in terms of power.
Yeah.
And this came out of the place which was in discussion for a pretty long time. We've been working in this enterprise space for the longest of times. But we saw that this emerge very well, which was banking use cases and financial blockchain use cases. Custom app chains, I think, have a big role to play.
Yeah.
They are the only way of how you can connect to the larger ecosystem of Web3 while getting the same guarantees that you would get from traditional blockchain, public blockchain infrastructure. So dedicated blockchain infrastructure is a prerequisite for many of these use cases because of compliance needs, data compliances, processing, decentralization, controlled decentralization, confidentiality. All of those bits are important for a typical financial use case.
Yeah. So Ravi, I mean, we are at the Digital Assets Summit in 2 weeks in New York, and let's say you bump into a business leader from a bank, right, in the elevator. What would be your pitch to him on why his or her bank should be setting up a custom chain?
Yeah, so whether we talk about a custom chain, as Sankalp rightly said, custom chain gives you independence to design your own rules.
Yeah.
So your chain, your rules. And when we talk about institutional adoption, that becomes of massive importance. There are quite a few use cases in blockchain which can be run on a public chain. But when we talk about institutions, they do require compliances, they do require auditability, they do require access controls or selective disclosure of data, how the data is being managed. So that's why for an institution, it becomes very important that having a custom chain, it can be a sovereign element, it can be a rollup, it can be a, traditional permission chains that can be set up. But the whole idea is where you control and manage the data and the logic layer as well as access controls.
Okay. So let's now move on to the core of our discussion, which is privacy, right? And there's been so much of buzz, so much written about it. There are so many players out there who have built privacy solutions for specific stacks. Now, they probably address different aspects of privacy. But from a bank's business leader's perspective, I think it might be good if you could explain what privacy actually should mean for them.
Yeah, so let's see privacy from the lens of a blockchain system.
Yeah.
Now, blockchain being a decentralized technology, that clearly means that the data is transparent, and the transparency and programmable logic as part of smart contracts enables trust.
Yeah.
But trust and transparency comes at a cost of data.
Yeah.
And that is where privacy comes in. In a banking system, the privacy means who can see what kind of transactions.
Yeah.
So that means selective disclosure becomes very important. Access controls become very important. So let me illustrate this with a typical example in a banking scenario. Let's take a case of a tokenized deposit in banking system. So let's say a bank A wants to transfer $50 million to bank B as part of the tokenized deposit settlement. In a traditional banking system, the way it works is that they have clearing houses or they have some kind of settlement systems through which this transaction can happen.
Right.
And it is already completely private. Nobody can see this transaction. Only the counterparties know what kind of transactions have happened and the details of the transaction.
Yeah.
So counterparties involved, the amount of transaction, and who is the corporate for which the transaction is being done, the corporate client.
Correct.
Now, in the case of blockchain, if you run this on a public chain or even a permission chain, the details of the transactions are still available using Block Explorer or doing an API call on the RPC nodes.
Right.
And that's where people may come to know who are the counterparties, what amount has been transacted, who is the corporate client behind the transaction. Now that is definitely not done, because from a compliance standpoint, from business standpoint, this is not acceptable in the financial space. So that's why they require privacy. And in a privacy-based system, still the blockchain will be used to validate the transaction. If let's say some kind of smart contract based compliances are required, that again will be implemented, that who are the parties, the transaction happens, it is validated, there is the audit trail so that regulatory oversee can still be there. So you gain all the benefits of blockchain, and yet at the same time, none of the other parties would be able to see who the counterparties are, what kind of amount of has been transacted. So that is, bringing privacy, which has been there in the traditional bank system, and combining it with the value of a blockchain system.
Right.
That's where institutional privacy in regulated blockchain systems becomes super important.
And just to add to that, I think you asked a very important question: what does privacy really mean to them? I think one thing that we should understand is that privacy can mean different things to different use cases within banking space itself. You want to look at the privacy within the ledger, you want to look at privacy at the access control level, the application level, but also what is being transmitted to each other, what is being executed between each other.
Right.
So, that's a interesting way of looking at it and understanding it.
So, Sankalp, you're the expert from a technology perspective, and I know you've done a lot of research looking at various privacy models, privacy stacks out there. So what do you think should be, what do you think are the existing technologies out there and approaches to privacy?
Sure.
And what is the ideal scenario, perhaps?
So, we've been working on a lot of use cases in fintech. We were working on it a decade back. I remember the first solution that we built in supply chain finance was in 2017,
Right.
and there was nothing available at the time. We used to work with technologies like Hyperledger, Fabric, and such, and there was no tooling as such. They were still quite ahead, I would say, with their time, with the channels and everything. But we had to work with a lot of hybrid encryptions and certain models like these. And from then, there has always been a good focus on it. So Tesla came around as a project in itself, and today we've got a lot of tooling around privacy, which is distributed in various fragmented silos, which is being used for one purpose or the other.
Yeah.
And they go by the, let's say Railgun, Rails is some of these examples, Paladin is another, and we've got ERC20, which is an initiative in Avalanche, which you've seen as well, private explorers and RPC proxy. So there's a lot of these implementations that have come out. I think the way to understand these solutions, because it can be quite a mouthful to explain it in a few words, it's better to understand what are the various layers of privacy.
Right.
Only then can you position each of these solutions in these different layers and figure out what is it that your use case requires, because it is usually often more sophisticated multiple layer solution that you seek. So starting with, let's say, an application layer, which is about your custom dApps or whatever the explorers, the bridges, all of that comes into it. You've got a network layer of who you're looking to, let's say, sync your data with, who are you broadcasting your data to, so private infrastructure plays a big role. You've also got the identity and access layer, which is where ZK-based identities are picking up. Example of that is Privado, which is one such solution. And that can link into the layer below, which is asset layer, where you can still have the same common ledger, but you can create confidentiality of what those assets are between the parties which are doing transfers, but also the issuer selectively. I think you use the word selective disclosure, which has a major role to play there. And finally, there's an execution layer at the core of it, where you can have multi-party computation, but done so in separate silos while still being secured through the underlying common ledger. So there are various layers, and these solutions, they fit in each and every layer. There's, and we can go on and on, but this is a bit of it.
So what can we expect from Zeeve and privacy? I mean, I think there is a huge opportunity. I mean, we've seen lots of point solutions out there, and I think many of them are still very early stage. They're very stack specific as well, right? So I think there's a white space there, right? I mean, so what do you see the opportunity with Zeeve, and can we expect something?
Absolutely. So, as Sankalp rightly said, that there are quite a few solutions and tooling available in the market today. Because privacy has been a focus. If you want to see a lot more institutional adoption, I think it's a must. Now, there are a lot of these solutions are fragmented. They solve specific pieces of privacy in the entire use case. So if you take any use case like tokenized deposit or fund, the privacy is required at multiple layers. And again, based on jurisdiction, based on specific policies and compliances within a specific bank, or if we talk about a consortium, the privacy standards and privacy requirements changes dramatically. So what at Zeeve, based on working with various banks over the last couple of years, what we realize is it requires a more unified privacy approach. And that is what we are launching. So we are launching a Zeeve privacy layer, which is institutional privacy for regulated blockchain systems. So, and the vision is that it should be stack agnostic, so that the underlying stack may change, but it sits as a middleware and enables different kind of use cases. So it should be agnostic to use cases. Use cases may choose to decide which pieces of privacy they want to use or enable. But the layer itself should be able to provide. So it's like a middleware which is sits on top of various stacks, and at the same time enables all kind of use cases. So that is the vision based on which we are launching a Zeeve privacy layer.
So when can we expect phase one?
Pretty soon. I think we are already working with we've been working on privacy for a while, so we have a lot of components which are built already, which are specialized for various use cases. So expect some big announcements coming soon. I think in 2-3 months' time you'll be hearing some big news.
Yeah. No, I think fantastic. I think it's a very exciting time for privacy, and I think in the next quarter or so, if we have something going, it could be truly exciting. So finally, I think I just want to have a little more open discussion around what are banks looking for? I mean, from people like Zeeve. I think today, based on various conversations, we see that banks want like a one-stop shop, right? So it'll be good to hear your thoughts about what is it that Zeeve can offer end-to-end for a bank. We can just keep this like a short discussion. Yeah, Ravi.
Yeah, no, I think you're absolutely right. And banks, being large institutions, they do require that they control the entire piece, and they require one partner who can bring in not just the infrastructure or the know-how about the use case or the domain expertise, but should be able to cover all kind of pieces which are required to enable a use case. So taking example of any use case in the institutional space, you do require a robust infra, which is enterprise grade infra, managing SLAs and monitoring, having all kind of upgrades. Then on top of that, you require engineering and protocol engineering, as well as support on customizing some of the pieces that may be required by the banks or maybe requirement of the use case itself. Then you require a robust middleware where privacy comes in, where governance comes in, auditability, policies, access controls, regulatory view, or some kind of dashboards which enable that. So all these tools are required, which are common to all different use cases. And then in addition to that, the banks may require to run the infra within their own environment. So they require some kind of model which Zeeve specializes in, bring your own cloud, where we run the entire infra on their cloud, still manage the entire piece for them. And then they may require some consulting and development work to be done on the use case itself. So that is what Zeeve is striving to be, an end-to-end solution for these institutions. So that starting from consulting, making the choice of a stack, to the use case, consulting on the use case or the economic design or the technical architecture, and then managing the complete infra along with all the different components.
I would also say that the lot of innovation which has been in the public space is now something that banks are enthusiastic about, which is really refreshing to see. And it comes with its own challenges and complexity. You have to go the extra mile with many of these small open source projects which are again fragmented. And I think that kind of complexity, they look towards us to map out all the sophistication that is required in a typical solution. So for privacy, let's say, you need to have an understanding what is possible, what are the capabilities, and then you have to map it to the solution very carefully. So this business and technology, they go hand in hand very closely, knitted together. And that's something that we have
And I think also the skill that we bring, or the capability we bring of knowledge across multiple stacks, I think, because a lot of banks are often debating what stack to take, right? I think we are able to provide great guidance, advice on that, provide the necessary engineering expertise for migrations and what have you. So I think it's a great spot to be in, exciting space, and I think 2026 is going to be the year of financial institutions. And I think hopefully Zeeve will be right there, right, to actually take charge of that. So friends, that was our discussion on really demystifying privacy in blockchain as far as banks are concerned. And we look forward to more conversations in the future. Thank you.